Hello, everyone. Welcome to Monday, May 5th for Now, Next, Later. Really appreciate you joining us live. We always love our live attendees, so thank you. Monday, May 5th, we have Paul G. Paul Gigliotti, how's it going?
Good. How are you, my friend?
I'm really well. Great to see you. I
Good to
uh,
see you too.
I was just welcoming the audience in from the waiting room. It always takes a few seconds to kind of like spill over, even though we are recording, and this will go up on YouTube as always. And today's episode, we want to cover actually two things. One, we want to do a little preview of the Mortgage Innovators Conference. California Mortgage Bankers Association started this conference a few years ago. It is a wild success, in my opinion, because I've had such a good experience there. I'll be back again this year, and so will Paul from stage. Master of Ceremonies, is that probably the best way to describe it? MC?
MC. So I'm actually not hosting this year.
Is it KP and Nike?
It's KP and Ike. They are taking stage. Those two are doing it up, man.
Well, you were the OG MC, and so you
Yeah.
will always be that in my mind for this conference. And then the second thing I thought we could use this as a entry point, since this is Now Next Later, we can talk about what innovation means in 2025. What are the expectations of mortgage innovators? I bring pretty high expectations to this show each week, and sometimes maybe too high. I think a lot of people are like, we're not getting there very soon. But I think that's the fun of mortgage
Yeah.
innovation, is how fast can we move and why, and everybody's making bets one way or the other. So thank you everyone for joining us. Those are our agenda items today. Paul, thanks for being here.
Of course, I coughed right when you said my name.
Okay. And
Thank
we
you so much for having me. It's always a pleasure to sit down and talk with you, Jeremy, and your audience. I love how you are so forward thinking with the concept of what is possible is what you remind me of. What is
oh,
possible?
thank you. Yes, the art of the possible. I appreciate that. Well, let's first start with this week. I'm headed out to Huntington Beach to meet with the CMBA members and all the other attendees and sponsors at Mortgage Innovators Conference. Can you give us a little sense, a preview of what to expect this week?
Well, I think we know our audience, right? So we're the mortgage lending industry. So I'll start off with first and foremost, it's going to be a blast. We're at a new venue. It's a fantastic venue right on the waterfront in Huntington Beach at the Hilton Waterfront, appropriately named. We do have a jam-packed session, I was just talking to someone about the importance of the panels and who you have up on stage and what the conversation is about, because that can get a little dry, in conference season, right? So KP and Ike and Susan have done a brilliant job this year again of curating talk tracks and information around what's happening in the industry. Um,
Hmm.
so I think what everybody can expect is seeing the usual players, hearing from some great sponsors such as Cotality, Poly, of course, Prudent Ai. The list goes on and on. Castle's going to be there. Ardley's going to be there. We've got just an amazing group of sponsors that are sharing information. We've got a great number of lenders that are also going to be there. So we're still maintaining our 38 to 39% ratio. So we've got a really nice group of individuals at a beautiful place on the coast to talk all things innovation. And we're having a huge party Thursday night. So really, what else could you ask for?
Yeah, it's hard to say no to that. Yeah, I think one of the things that strikes me too is it's helpful to have an event like this where you get to think about all the different corners of change and innovation kind of in a conference setting in a compressed period. So when you go to the some of these larger events, and it's everything from legacy questions to tech vendor questions to regulatory compliance questions. And of course, everything in our industry has touches all of those. But here it's really able to say, all right, mortgage lenders in the mortgage lending business and the technology companies that support them, what is changing? What should you know about? And one of the things I enjoy is like hearing, oh, I didn't realize that company had made that many more releases this year, or that this was on the horizon. I see where, and on this show, we talk a lot about like verification or data or servicing recapture, analytics. How are you using data science? How are you using AI? And to get that in one place, I mean, I know we wanted to just mention it because we'll both be there and we're also, thinking a lot about this question. So seeing all those in one place, I think is key.
Yeah. You know what else I think is really key, and I hope I don't go too far with this, but I've been doing a lot of research on AI and learning. I've been talking to you, I've been talking to Suha, I've been talking to Jeff, well, I've been talking to a ton of people that we know in the industry and having conversations about, what is AI going to do? Also, someone that I follow often, John Chambers, he was the CEO of Cisco Systems and I was there, and I think he's such a brilliant person. AI in itself is changing things so quickly and so much that I think what it's doing is really transforming technology as a whole.
Mhm.
And what I mean by that is technology is becoming easier to grab. It's easier to obtain. It's easier to implement. And so I think what's really interesting about Mortgage Innovators Conference and some of our sponsors that are going to be there who have an AI solution or who have tapped into utilizing AI within their technology is comes that conversation of innovation because technology is so easy now to have and to hold from this day forth. I feel like I'm now getting married to you.
Okay.
Um, that you what you really have to think about is what are you going to do with that technology? What are you going to innovate? What is your new workflow going to be like? And what is the expectation of that workflow? So I think that's part of the reason why Mortgage Innovators has been so popular is because, to your point, it's not just a conversation around, here's this great thing that Poly's doing. Here's this great thing that Cotality is doing. Here's this great thing that Funding Shield's doing. But what does that mean? What do you do with it? Like, how are the attendees going to walk away from this conference and be able to implement and talk about what they learned and make their business better, their conversations better, and push the industry forward to what the consumer wants?
Well, you just set me up with the perfect segue because honestly, when I think of now, next, later, which, we're going on, uh, how long have we been doing this show? I think we've been doing the show now since August, I want to say, or something like that.
Yeah.
When I, come on, when I think of now, next, later, I actually think of that question. How do we find this innovation and make it addressable, consumable in the industry's bloodstream? So let's just start with this question around AI and how we don't seem to have questions as much, especially as innovators, of what AI is capable of. Meaning, we dream big. To your point earlier, it's the art of the possible. So everybody we talk to, everybody I hear from tells me a really big capability, a really robust capability, a really amazing capability that AI can accomplish. We now know ChatGPT can do this, Copilot can do this, Gemini can do this, Claude can do this. We're hearing that, but it's irrelevant overall if there is no change management adoption to get it into your business or if your business is resistant to it. And so now it seems like after all this time of talking about it on Now Next Later, we're ready to kind of spend at least 20 minutes here digging into how should we be thinking about that? How do we take a tool like AI in all the different providers, including yours, right? Including Prudent AI. I should have congratulated you from the outset on Chief Growth Officer, but
Thank
that's part of the celebration of innovation and technology and the people we get to work with is that. So congratulations.
you. Me
But
too.
let's talk about it. Let's just dig in. What is it that makes AI um, accessible to a mortgage lender in 2025?
Well, that's a great question. I think that I personally feel as technology is moving forward, more and more technology is going to be powered by AI. I think AI will, it'll either be in itself overshadowing technology, or it will be a hybrid of OCR and AI. But I think as technology is moving forward, you're going to need a component of AI for the technology to be relevant. I had mentioned John Chambers earlier, and it's very similar to what we were. Am I frozen? Did I lose you guys? I'm sorry.
No, it's actually on my end. You keep going. You're
Okay.
good. It's absolutely my end. Just keep going.
Okay. So as I was talking about John Chambers before, he wrote this great podcast and he compared artificial intelligence to the internet, right? So if you think about all the things that we do on a daily basis for work, because we're talking about work stuff, not home
Yep.
stuff, it's all powered by the internet. All of our solutions that we're getting on, they're all web-based now, whereas they used to not be. So at some point in time in the very near future, AI will be powering everything. And so I think what's really important is it's funny you mentioned Copilot or Chat GTP. And to be honest with you, Jeremy, when I first jumped into my role at AI, that's kind of how I looked at AI, is
Hmm.
those functionalities, but it's really so much deeper than that.
Hmm.
And you can get really technical and granular and talk about, your AI models and your AI agents within those models and the algorithms that lay over it that provide the guardrails. But what AI should do is AI should be a kind of a three-dimensional model where it starts to perform the tasks and functionality that you train it to do.
Hmm.
The analysis. Here's the response to the analysis. When I was doing this analysis and I provided you this response, here's how I got there, and here's why I got there.
Yep.
That's the functionality of an AI agent, right? So it
Mhm.
becomes this talk track where at Prudent AI, one of our solutions, the bank statement income analyzer, we have AI agents that when they're looking at bank statements, segment these deposits are income and these deposits are not income. And
Mhm.
those AI agents get to learn in the model when the users of the lender are saying, no, this is income. The AI agent gets to learn that. And so then they start to do that function. And that's
Mhm.
where the efficiency comes into play because your rate of accuracy goes up and you've got a partner. You've got a side hustle or a sidekick, working with you and doing the function that you really just don't want to do. Because what underwriter wants to comb through 700 pages of a bank statement and categorize things as income versus non-income? That underwriter was born and trained to analyze, does this borrower, this consumer, have the ability to repay this mortgage? Not look and categorize income versus non-income, right? Um, so I think that as organizations, lenders start to look at why AI, it goes back to what you opened up with. What is possible with AI, which is really a lot.
Yeah, that's a great way I really like that framework. So I want to just put a finer point on that for the audience. And I tend to pick on Encompass just because it's easy and they're the big 800-pound gorilla, so they don't mind when, little old me picks on them. But like Encompass moved to web-based, but looks the same. And I think that's a key piece that you're talking about, which is, hey, look, you're used to seeing this. Here's your milestones. Here's your tabs. Here's the different fields you need to be able to call up to work on, depending on your role. We're going to move it to the web. We're going to move the web browser to the cloud, but you're going to have what you need to get your job. You're going to have your tools, right, to get your job done. And
Yeah,
even though I criticize it for being like older technology, the reality is what you're saying is like, yeah, but that's because we're making it easy for people to use. But behind the scenes, we can do all this powerful stuff. And what I'm hearing is, hey, look, AI can do really, really strong pattern recognition, data compilation, data extraction, and it can get better and better at it. But you still have to train it. You still have to train it for what you want it to do. And you still have to serve it up to your experts, your people, in a way that they actually are familiar with using it. So, for instance, income's not changing, at least not yet, right? It's still provided in one of two or three ways. It's provided on a tax form, it's provided on a human resources payroll form, or it's provided from a bank account. Like the
Right.
data sources are the data sources. Now what? What are you using to collect those, and what are you using to serve it up to make your people more powerful? So that's sounds like that's a good comp for what we're experiencing, at least on the operations underwriting side.
Yeah, absolutely. And what's really exciting is when you speak to organizations and they understand the importance of moving that from the operations side to top of funnel. And that's where we're moving with Prudent AI is talking about let's not have that be a review or a functionality that's occurring at underwriting, but let's look at those key factors as the application's coming in.
Mhm.
So that we can properly serve these consumers and tell them what they actually are qualified for, what type of loan, what type of down payment, what is the monthly payment going to look like. That's just another example of the innovation that AI is going to bring to the table in our industry. Because of that, as you were talking about and so eloquently put, your AI, the agents get to pull this data in and do this analysis, and they're being taught on how to do the analysis properly. And it happens so quickly with such a great efficiency level. I mean, you're talking about what would take an underwriter maybe 2.5, 3 hours to compile and analyze takes a minute, or maybe even less if it's a simpler, look at.
Mhm.
So that's to me where the real power comes into play, Jeremy, is we get to, with AI, we get to come in and if we want to take a functionality, we get to shift left and change where it is to provide a betterment to our consumer, a
Mhm.
betterment to our customers who are mortgage lenders to support efficiencies, to create gain so that those lenders can have a better market position. That's really the beauty of AI from my perspective.
So I just want to talk about one of those steps because I am somebody who gets really excited about reordering the process because in my world, I know how valuable that could be because I'm so consumer facing all the time in my career, in my work, and I want consumers to have this power. But I think it also scares a lot of people, especially on the operations side, command and control environments, top tech kind of infrastructure environments. It's like, wait, if we reorder everything, I have to rethink everything. And what if we do it out of order? What if it changes? Or what if it ends up costing me more? Is the incentive that you mentioned to do this the incentive that you will then capture these leads better, faster, stronger? Or is it cost reduction? And can you talk about maybe 1A, 1B if you're going to say both? But I want to kind of get to what we should be motivating lender partners or what lenders listening who are trying to champion this internally. Um, is it is it lead capture and conversion, top of funnel for purchase and refi? Is it cost reduction? How are you explaining it to people?
I don't think it's necessarily lead capture, but it's supporting the lead as it comes in. So
Yeah.
as prospects are coming in, Prudent AI's main focus right now is as a prospect comes in to a broker or to a retail partner lender, let's take a look at the qualifying factors immediately instead of having the file move through the funnel. So specifically, if I may speak about Prudent AI for a hot second,
Yeah.
specifically, Prudent AI is launching a new platform called Prudent AI Upfront. And the concept of Prudent AI Upfront is broker, send us everything you have on the consumer as you're talking to the consumer. Or retail loan officer, send us everything you have or give us access to everything you have about this consumer. So we can analyze it. We can do an instant qualification of income on the documentation that we have, whether it's tax returns, pay stubs, W-2s, or bank statements. We can take a look at their credit, see what their credit score is, and then come back to you and say, these are the loan products within the lender platform that
Mhm.
this consumer, can apply for and be granted. Now, that's of course minus home inspection and appraisal coming in at actual value or some of the
Yeah.
nuances. But the concept, Jeremy, is when the lead comes in, and we all know that a large portion of the somewhere between 11 and $12,000 per loan is that lead coming in. When that lead comes in, when the lender has spent the resources, time and money on bringing that lead in, they're taken care of immediately up here.
Mhm.
And they're given you know, certainty that this program that's being offered to them, it's going to work. And so what that does to the operations team as that file comes in with that data that's certified with which loan program, it gives the operators, it should be the opposite of fear. It should be relief because then
Mm,
you're not playing that game at underwriting where you have to close in 10 days and oh my gosh, they don't qualify. We didn't catch that they're brand new at commission income.
right.
We caught it now. It's in underwriting and have that oh damn moment, right?
Right.
And so the concept with Prudent AI's new solution is let's have that talk track top of funnel so that the brokers or the originators aren't they're maintaining their relationship with the consumer, right? And so they're setting expectation top of funnel.
Yeah.
Um, and I think what that's going to do is that might reshuffle some of the chairs on the deck, right? That might change some things. It's a different thought process. It's a different way of looking at it. But with the ability to do what it is that we can do now as an industry with artificial intelligence, that's our next step. The consumer
Yeah.
deserves to know if they qualify for this loan top of funnel. Really
Yeah.
quick for it.
I couldn't agree more. It's why we kind of talk about like data management philosophy so much on this show is like because if you're building an LOS, if you're building a product and pricing engine, if you're building these AI tools that you mentioned, you have to start thinking about it differently. It isn't we have all the information, so now we pass it to the underwriter. It's that we have things running in the background that are constantly looking at the data from 0% in to 100% in, and you get a level of certainty on the way up.
Right.
I understand my screen froze, so if you can still hear me, Paul,
I can, and
I'm
I'm
going
gonna
to
try to
unfreeze in a second.
grab
But
a picture of
one of the
the
things that
frozenness.
I really like is that philosophy of running tools in the background. I like the philosophy of running tools in the background against however much data you have from the time you capture a name to the time you give a final approval. Uh, Alan mentioned in the chat, and I always like bringing in the questions from the audience. And so, Alan, thank you for asking. Um, this is going to disrupt certain roles. And we already said, sure, of course it will, because we're going to reorder things and we're going to be changing. And anytime there's change, there's a lot of consequences intended and unintended. But I'd like to head straight at it because on this
Yeah.
show, we try to talk about it straight away. One of the things that a lot of people seem to do today is data collection or data verification. That's not necessarily their highest best role. So we have this catch 22 where we know deep down people are not in their highest best role in our organizations today, but then we also get nervous of like, well, what if we eliminate that? And it implies that that person does not have another task, role, or perspective to do in the mortgage process. What's your take on that? Because that seems to be this question of like, which jobs are at most risk? Well, which tasks are at most risk, and can that job do something else? But I don't know.
Yeah.
What's your answer?
I think your statement was perfect. So it's not a relieve of function at all. It's a support to function. We'll go back to the internet. It's just as the internet supported a variety of different functions when it came to be. Now, there's the flip side of that is when e-commerce took off in the internet, and it really hurt some of the retail businesses. But what those retail businesses did is they turned into also an e-commerce business, right? So I think first and foremost for our industry specifically, what AI's solution can provide, and absolutely 100% Prudent AI, we want to jump in and support with scalability. So I feel that our industry is going to start to ramp up a little bit, right? And so we now have a baseline of where we are with team members and organizations. And with AI being brought in and Prudent AI solutions, as well as Prudent AI Upfront's new solution, as more and more files come into the pipeline, as more and more consumers are wanting mortgages, there's not going to be as much of a need to beef up team members, in certain departments or in certain functionality or, in certain departments. It's going to, and I said departments twice, I apologize. It's going to actually act as a support mechanism. So we're going to level out scalability first and foremost. But also to your point, Jeremy, the AI agents in those models act as, again, as support to provide the processors and underwriters with the ability to do what they want to do for their job. An underwriter wants to become an underwriter because they love to research. An underwriter wants to become an underwriter because they want to figure out a way to make this loan work. But in order to do that, they need certain data points to be accurate. And they need that really quickly. They need a qualifiable income to be accurate in order for them to massage files and see how they can make it work within, whether it's an agency or non-agency program. So it acts as a support mechanism to those that are doing their job. I think my response to you would be, I really don't know how many jobs will be lost. I feel like lenders, as AI starts to gain more traction, lenders will not have to hire so many individuals to do one function, an underwriting function. So I think that it's less of a conversation of job loss right now and more of a conversation of how much more growth will there be as the mortgage industry starts to gain a little bit more traction and pick up.
Yeah, I wonder if what we're saying, we always leave a little time for later, for the future here on the show, and sometimes it's 2 minutes and sometimes it's 8 minutes, but we try to get a comment in there about it. And I'm wondering now if what you're saying isn't that AI might allow underwriters to actually make risk decisions again, right? Instead of rubber stamping AUS, they may actually get to look at a file and say, you know what, we should do this file. And I know the income looks like this, and I know the guidelines are this, but I'm taking a look at it now because I've been freed up to actually make a professional expert risk decision. And I think a lot of the tools we're seeing in places like appraisal are actually for high level professional appraisers, real estate and commercial appraisers. The tools are making them better at giving a more accurate appraisal and at taking some of the paperwork off their desk to like really be experts. And
Yeah,
underwriters honestly don't feel like they've had to do that for a while, to be
yeah,
honest. And
yeah.
so maybe later we actually do bring in these harder products, these more flexible products, and we actually start to have humans in our organization go, you know what? That condo is not as risky as the data says because of this, this, and this. Or I got a chance, to your point, I got a chance to research this market, and we should be doing construction lending in this market. My organization is going to take that on because I've got underwriters that can
Good.
now do that, know how to
Yeah,
do that, or will do
yeah,
that.
yeah.
And I think fix and flip's a good example. I think there's a lot of good examples, but I'm excited by that because we do get this question a lot, but I think we need to think about it in a broader context of what else could we be doing as
That's
mortgage
right.
companies. And I honestly, I'll say one more thing. I know this is provocative. I don't think we're lowering the cost. I think mortgage companies need to stop promising we're going to lower the cost. You're not. You're not going to lower the cost. Start with the right tools for the right people to serve the customer at the right time, and then see what happens. But like, I've just given up trying to lower the cost of mortgage origination in any kind of real way until we get better at this. And once we get better at this, then we'll start making promises about how we lower the cost or improve efficiency or gain profitability in new and different ways.
Yep. Brilliantly said. I completely agree.
Well, Paul, thanks for joining again. Now, next
Absolutely.
later for Monday, May 5th. Thank you for being here. It's exciting to talk innovation, what's possible. Everyone, thanks for joining us live. Join us next week. We will have a lender. Taylor Stork will be joining Sasha and I, and then Wendy Lee from Logs, the new managing partner at Logs, the week after that. So look forward to that. Thank you so much. Take care, everyone. Bye, Paul.
Bye.